Finally, folks, we did it. We did it. We found a miner that didn't disappoint in earnings season. Of course, I'm talking about the great Agnico Eagle, who on Wednesday evening reported their third quarter financial results. Now, look, this major gold producer beat analyst estimates both on expected revenue as well as earnings per share. But the market wouldn't tell you that because, well, somehow it's down in after hours trading. Who said the market wasn't rational? Of course, by the time this video is actually published, edited and published, it was going to take some time, the stock could be green. What do I know? Guys, we're looking into Agnico Eagle's earnings. Let's dive in. Okay, folks, so Agnico Eagle for the third quarter posted top-line revenue of $2.1 billion, followed by net income of $567 million, a record for the company, which translated to earnings of $1.13 on a per-share basis. This was off the back of gold production of 863 ounces in the quarter, which was actually their worst quarterly production figure this year. Production was actually down 3.6% on a quarter-over-quarter basis, while being up 0.8% on a year-over-year basis. The company also produced 602,000 ounces of silver, 914 tons of zinc, and 797 tons of copper as byproducts during the quarter. All-in sustaining costs also climbed in the third quarter to $1,286 per ounce, up from $1,210 in the year-ago period, and up from $1,169 in the second quarter. The increase, however, is a function of higher gold prices, which led to higher royalties being paid out on a per-ounce basis, which was partially offset by the terrible Canadian dollar. Thanks, Trudeau! But these problems largely go away when comparing the average realized gold price during the quarter, which amounted to $2,492 per ounce in Q3, a 29% jump on a year-over-year basis and a smaller 6.4% jump on a quarter-over-quarter basis. Basically, a higher spot price resolves all problems. Agnico Eagle, meanwhile, pumped out adjusted EBITDA of $1.2 billion during the quarter, a 63% improvement over the $768 million recorded in Q3 2023. On the guidance side of things, the producer has maintained its prior estimates, calling for 2024 gold production to hit the guidance midpoint of 3.45 million ounces at an all-in sustaining cost of around $1,225 per ounce. The massive jump in gold pricing has also had a major impact on cash flows, with Agnico Eagle seeing cash provided from operating activities more than double year over year, going from $502 million to $1.08 billion. Free cash flow climbed to $620 million, which is an eye-popping 653 improvement over the $82 million figure from last year. But Agnico, to its credit, isn't squandering the opportunity. The company paid down $375 million in debt with the cash flow, while the company year-to-date has reduced their net debt by $1 billion to end the period with $490 million in net debt. This is on top of declaring a 40-cent dividend for shareholders and repurchasing $30 million in stock during the third quarter. And the company still ended the quarter with $977 million on the balance sheet as of September 30th, an improvement of $55 million over the second quarter. All right, we're not going to sit here and go through each site on a mine-by-mine basis because then this video would be an hour long and I'd probably fall asleep halfway through recording. Anyways, here are some of the highlights. To start, Agnico indicated that site prep for the underground mine has advanced at the Detour Lake property, with the pad that will host surface infrastructure now complete, along with the removal of overburden for the portal. Exploration has also continued here, with the drill team intersecting 22 grams per ton gold over 12.9 meters, among other highlights. At Canadian Malartic, ramp development continued at the Odyssey mine, reaching a depth of 873 meters, while the shaft has reached a depth of 839 meters. For reference, the shaft and ramp are expected to reach depths of 1,800 meters. And for those who don't know, the mine is expected to produce 500,000 ounces of gold a year beginning in 2030, using the ore processing plant at Malartic. Finally, at the Hope Bay project, exploration continued with 33,100 meters of drilling during the third quarter, with a further 15,000 meters slated to be drilled in Q4. Highlight intercepts here include 18 grams per ton gold over 16 meters and 16.8 grams per ton gold over 27 meters, among other results. Okay, so let's get into the investor reaction from what we can see on media and social media. After the results Newmont put out last week, let's just say that investors were more than a little excited to see positive results from a gold miner. The mining bartender says that the earnings look good, that they beat expectations, and that they got their AISC, well, he says up to $12.86 on an increased royalty cost, and that debt will likely be zero by June of 2025 at this rate. Thomas Wood applauds management, and Economic Alpha seems to be pretty excited that the company is paying down their debt and cleaning up their balance sheet. CNBC's Guy Adami even got in on the euphoria, indicating that he's a bull. In fact, some were so impressed with the results that they called for Agnico Eagle to replace Newmont in the S&P 500, while others just took the chance to dunk on Newmont altogether. So let's wrap it up. From a financial perspective, Agnico posted a great quarter. From a production perspective, it had some room for improvement. But a strong gold price masks minor faults, and that seems to be what happened here. And yeah, a guy could complain about the all-in sustaining costs rising, but when there's royalties in place, there's aspects of the cost structure that are going to simply be out of the company's control. But I gotta say, it's nice to see gold investors get a win here, so we aren't going to be too critical. With any luck, it breathes some excitement into the mining sector as a whole, especially as we continue to hit new highs on the price of gold. Now, look guys, at the time of recording, gold is trading around $2,800. This time last year, gold was trading around $2,000. That's an $800 increase. Now, the company's guiding for around 3.5 million ounces of gold this year, which works out to a lift of nearly $2.4 billion. Now, of course, there's going to be some added costs and they're going to have to pay some royalties on that, but that's telling you the type of operating leverage that the company has here. Now, look, is Agnico Eagle the most torquey stock you're going to find in mining? Of course not. You can go find some junior mining company that's putting some drill bits into a grassroots project if you want to find that. But I'll tell you this much. The stock this year is up 70% year to date, 86% on the 1 year, and okay, 55% on the 5 year. Fun with arbitrary endpoints. But still, they have become the gold standard of the gold operators. And as capital starts to flow into the miners, which it's going to if gold continues to do what it's doing, I can promise you that Agnico Eagle is going to become one of the hottest stocks out there, because those portfolio managers that have real money are going to want to invest in the best operators and the best capital allocators. And guys, there's no question that Agnico Eagle is top 5 in the entire mining space, arguably number 1. So look for this name if you're looking for a less risky gold name that's still going to give you some pretty high reward. But hey, folks, gold is ripping. We're starting to see people on social media talk about mining again. What can I tell you? I'm thrilled to see that Agnico Eagle had a relatively good quarter. Guys, let me know what you think in the comments section. Are you long Agnico Eagle? Do you got other gold names you want us to take a look at? What's your thoughts, folks? Please hit that like button, smash that subscribe button, and let us know what you think in the comments section. Thank you, everybody.